We did it, baby. We did it. We did it!
We did it!
Nah, but for real, bro, listen. The market is closed. Market has closed, and what did it do? It played out just how I expected it to. I'm gonna show you the charts. I'm actually so glad I'm doing these journals and stuff, you know what I'm saying? Because now I can see how, like I said, how I'm thinking from the beginning of the week to the end of the week. So now I can focus on executing these trades, getting this money, and doing withdrawals. I did a withdrawal today. Now let's go over the market. Let's see what I got, and let's see the positions that I got for today. All right, we can go ahead and pull up the charts. We're going to tradingview.com. All right, so this is how the week ended. Let's see. Before I remove the drawings, bro, what did it do, bro? Look at this. Under this blue line, what I said, close under this bullish daily candle, and that's exactly what it did. Now, what I expect to see is momentum continuing down. First, we'll see it come to this area. Like I said, let me remove all these drawings. I see price coming down to this area right here. We'll go ahead and mark this off, and we'll make this red. So we think price is going to come down to this area. It's going to test this moving average as well as this. It may come down to this far, but we got to, like, you know, keep an eye on it and stuff over the next couple days, because since this is the end of the week, we want to see how our weekly candle has formed. And as you can see, our weekly candle has fully engulfed last week's candle, ending it in a seller's week. So now that we got a seller's week, I expect it to be another seller's week to continue that momentum down. Like I said, we'll see how it reacts here at the previous resistance and then turn support. And then if this does break, I see it coming down to this area. Let's put a line here. And all I'm doing is putting my points at areas of support and resistance. So these are just basically what those lines are. It ended perfectly, bro, exactly how we wanted it to. So that's all that matters now. As we focus on next week, we wait for this pullback. We wait for this pullback to come on up here. So it came down to here. We expect the pullback. Let me lock this drawing. So we expect the pullback to come up here, either testing this previous neckline, which is previous support. This is a break of structure right here. So if it breaks through this break of structure, it can either go here, and then if we get up here, all right, then now we in dangerous territory. As far as, like, sellers is either still in if it can hold this level, because this resistance level here is so strong, it's insane. Look how many times price has hit this area and went down. Like, it hasn't broke this area since it's hit it. So like I said, I either see price coming to this point, or it's gonna retrace all the way up here. And if we do a fibs on that, that's basically a 61.8, 78.6, and that's 100%. So let's fibs that out, and let's see if we right on that. So we do from point A, which is the seller's candle, point A, to point B, which is the seller's candle on the hour. This right here, 61.8. This right here, 78.6. And like I said, this would be 100%. So wait for our PRZ levels to get hit, rather it be 61.8, 78.6, or 100%. That's where I'm going to be looking for my entries. So these are the areas that I'm looking for my entries. Here, here, and then here. And then if it does break through and it hits and it breaks above and closes like this, and I get a candle that closes above, then I'm gonna get out of the trade. Like, after that, the trade is invalid, and it's basically gonna be keep going up from there. So As soon as you see it hit to this 110%, you could either hold it if you trust it, or hold it until 120. 120 should be your final, like, that's your stop loss. I'm not going after that. Even though if you look to the left, price has actually reached this point and hasn't passed it. So low key, as long as you're above this 127 range, then you should be good. But I wouldn't really risk it unless you had an entry at like 100. Then I would see taking it to 127. But having an entry at 61.8 and taking it to 127, like, that's just so much points compared to having it from 100 into 127. So if I had an entry at 161.8, the max I would go is 110%, negative 110%. Not negative, sorry, just 110%. I would take it there. And then if I got a 78.6 entry, I would take that to 120. And then so on. If I had a 100 entry, I would take that to 127. So we have a plan for next week, focusing on sells. Once we start hitting 2530, then that's when I'm gonna start looking for buy opportunities. Wait for it to break up, come back down, retest this new support, and then from there take it on up. So where I see this going, if it does come down to this 61.8 or these three areas, I see it coming down to either negative 27% or going to negative 61.8%. So I'm planning to get my entries in and holding it all the way until it gets to those take profits. So that's what I plan to do next week. Now let's go ahead and just go over the trades that I did take and how what we said last week happened perfectly. So let's go ahead and go over that. I'm gonna leave this blue line because that is a really good level. All right, that's our blue line. If price goes above that blue line, we're definitely gonna be looking for our buys and only sells under that line. I would never, not never, I don't want to say never, but I'm over getting into my trades. Like, I know that it's going down, but I'm over getting my trades at negative 38.2% just because from here to here it's just so much points, bro. And it's just, unless I'm doing risk management, which 1% to 5% on the account, that's good and all. If you got bread in your account, 25,000, 10,000, that's okay. But working with $200, $300, $400, I'm risking a little more because the risk to reward. If I blow the account, I blow the account and I'll just put more money in. That's the mindset I'm in right now, and that's how I'm gonna keep focusing. But I'm still gonna use my risk management. It's just I'm not gonna go under a certain position size because I want substantial returns. I don't want no baby money, bro. I don't want $20 here. I don't want $50 here. Nah, I need to make hundreds. I need to make hundreds. And then from hundreds, I need to make thousands. And then from thousands, I'll make millions. No cap. Let's get it. All right, let's go over our trades that we took. We were able to get a withdrawal this week, so shout out to that. You know, the market has taken so much money from me, bro. It is time that I take money back. So taking money back is the main thing that I'm focused on. So I had a position at 25.2387, which is right here. 25.2387. And then I had another entry at 25.2259. Bro, these are good as, these are some good ass entries, bro. Alright, so let's see. I'll just change this to 59. So these were my two trades were at, or my two positions that I had in. And I got out at 25.0874. So once again, I did not hold it for the full potential of the trade. So I'm working on that, and I'm gonna definitely do better on the next go. No cap. 508.74. Alright, so we got out right here at this previous support that they had since since they had since Thursday. So these was our two entries. We had 25.23 and 25.22. Like I said, great entries. The only thing I would say I would do better next time is holding my trades longer. What I did see is kind of the reason I was getting out was it was on this 4-hour time frame. I always go to the higher time frames because these are my structure time frames. I only base my structure off of the higher time frames, and I get my entries on the lower time frames, like the 5 minute, 15. So when I seen it coming down to this MA right here, I should have, like I said, I should have held it. But as you can see throughout the day, as I was getting my entries in, like it took so long to actually get down there. Like price was just struggling, and then you see this pullback. Like this is a crazy pullback right here. But seeing this pullback not get filled and the next candle, see, waiting for these candle closes right here. See, waiting for this 15-minute candle close. Seeing that I didn't have a bullish candle for another 15 minutes, that could have been my sign to stay into the trade because of the 15-minute rejecting this big this wick right here. This is not a trend line. This is just the line that I was doing to do the structure. But yeah, so it's going down right here. I should have kept it in for the 15 minutes. What I need to start doing is basing once I get entries, basing my X's off of 30-minute bullish candles. So seeing that this has a broke structure right here, not broke a structure, but it's like a bearish engulfing. A bearish engulfing. Once this candle goes above here and closes above this level, that is my key time to get out of that trade. So that exit would have been the best exit. If I didn't get that exit and say I waited for the 30 minutes to close, I would kind of have to wait for this. You see this pullback, that would be the next best time to get out. And then anything after that, getting out of the trade is just the best thing to do from there, because you're seeing that momentum is slowing down. Clearly it's finding a support at this level of 24.94. So that's just a supreme time to get out. So yeah, for sure, next time I'm focus on the candle closes. This was a good candle close, bro. When this was happening, I'm pretty sure this was 9 a.m. Oh, this was 10. Okay, at 10 o'clock, because I still have a 9 to 5. Seeing this happen all at 10, and bro, it coming up here and then coming down here and then coming back up here. After that, I probably was exhausted of the trade, and I just basically wanted to get out. So I ended up just getting out. Like I said, I could have waited for this candle close, see if this candle was a bullish candle, kind of how this hour candle was a bullish candle, and went from there and close it from there. So we'll just work on that next time, and we'll focus on holding our trades longer to maximize our profits. What I see us doing next week, since we had our bearish candle, do a bearish engulfing, we're gonna wait for a pullback to get up to this area of 61.8, 78.6, or 100%. Get a sell in again, and then from that sell, take it down to our negative 27% or negative 61.8%. And then from there, we'll focus on getting our next entries, and we'll see how the week ends. So yeah, that was the trade breakdown and also the trading journal for this week. I will be back to make another video on Tuesday or Wednesday, coming midweek. I'll try to do some screen recordings, maybe on my phone, because like I said, I work in the morning, so I look at the charts around 7 a.m. So I'll probably like do recordings in the morning before I go to work, and then do screen recordings on my phone or something, just to show y'all the trades that I took, and yeah, in the position. So other than that, shout out to y'all watching this video. If y'all made it this long, shout out to you. But yeah, like I said, this is truly just trading journals to keep myself accountable, getting to that next level as a trader, breaking habits that a lot of traders are doing, like getting out of trades too early, being over greedy with their trade, over leveraging too much on the trades, and placing too many trades in a day. So all those things I want to avoid doing. 1 to 2 trades a day, holding until stop loss and holding until TP. So that is the plan. Yo, thanks for watching, bro. We out. Deuces.